You may already own a life insurance policy, either through your employer's group plan, as part of your benefit, or through a policy you bought yourself. Perhaps you think you need additional life insurance protection. If you have no life insurance, you may be thinking of buying one. Whatever be the case, this presentation can help you make the right decisions about life insurance. The main purpose of life insurance is to provide financial security for your family.
It helps to ensure that when you die, your family will have the financial resources it needs to protect the home and provide the income needed to run the household. Life insurance is a contract between you and an insurance company. That contract requires that the company pays someone you name as your beneficiary or beneficiaries a certain amount of money when you die. With life insurance, you can provide a guaranteed financial nest egg for your family's future. Now let's take a look at the important things to consider when buying life insurance. Review your own insurance needs and circumstances. Choose the kind of policy that has benefits that most closely fit your needs. Ask an agent or company to help you. Be sure that you can handle premium payments. Think of this. Can you afford the initial premium? If the premium increases later and you still need insurance, can you still afford it? Don't sign an insurance application until you have reviewed it carefully. Be sure all the answers are complete and accurate. Don't buy life insurance unless you intend to stick to your plan. It may be very costly if you quit during the early stages of the policy. Don't cancel one policy and buy another without a thorough study of the new policy and the one you already have. Replacing your insurance may be costly if you have not done due diligence on the new policy. Read your policy carefully. Ask your agent or the life insurance company about anything you are not clear on. Review your life insurance policies carefully. Seek advice from your agent or company to keep up with the changes in your income and your needs. If you are thinking of canceling a life insurance policy, here are things you should consider. If the policy you have now no longer meets your needs, you may have to replace it. You might be able to change your policy or add a new one to increase your coverage. In all cases, if you are thinking of buying a policy, check with the agent or company that issued the one you have now. When you bought your old policy, you may have seen an illustration of the benefits on your policy. Before replacing it, ask your agent or company for an updated statement. Check to see how the policy has performed and what you are likely to expect in future based on the amount the company is paying now. If you decide to replace your policy, don't cancel your old policy until you have received the new one. You then have a minimum period to review your new policy and decide if it is what you wanted. It may be costly to replace a policy. Much of what you paid in the early years of the policy represents payments for the company's cost of selling and issuing the policy. You may pay the type of cost again if you buy a new policy. If you are older or your health status changes, the premium for the new policy may often be higher. You may not be able to buy a new policy, or in certain instances, you may be declined a policy. So here are some questions to ask yourself. How much do you need and for how long? How much of the family income do I provide? If I were to die early, how would my survivors, especially my children, get by? Does anyone else depend on me financially, such as a parent, grandparent, brother or sister? Do I have children for whom I'd like to set aside money to finish their education in the event of my death? How will my family pay funeral expenses? and repay debts after my death? Do I have family members or organizations to whom I would like to leave money? Will there be estate taxes to pay after my death? How will inflation affect future needs? Now, as you figure out what you have to meet in terms of needs, look into the life insurance you have now. Include any group insurance you may have from your workplace. Don't forget, Social Security and pension plan cannot solve all your problems since the benefits are not enough. Add other assets you have: savings, investments, real estate, and personal property. Which assets would your family sell or cash in to pay expenses after your death? What is the right kind of life insurance? Very important question. All policies are definitely not the same. Some policies give coverage for a lifetime, and others cover you for a specific number of years. Some build up cash values, and others do not. Some policies combine different kinds of insurance, and others allow you to substitute one kind of insurance with another. Some policies may offer other benefits while you are still living. Your choice should be based on your needs and what you can afford. There are two basic types of life insurance: term insurance and cash value insurance. Term insurance generally has lower premiums in the early years, but does not build up cash values that you can use in future. You may combine cash value life insurance with term insurance for the period of your greatest need for life insurance to replace income. Now let's take a look at term insurance. Term insurance covers you for a term of 1 or more years. It pays a death benefit only if you die during the term. Term insurance generally offers the largest insurance protection to your premium amount. It does not build up cash value. You can renew most term insurance policies for 1 or more terms, even if your health status changes. Each time you renew the policy for a new term, premiums may be higher. Ask what the premium will be if you opt to renew the policy. Also, ask if you will lose the right to renew the policy at some age for a higher premium. Some companies will give you the right to keep the policy in force for a guaranteed period at the same price each year. At the end of that time, you may need to pass a physical examination test to continue coverage, and this may result in premium increase, of course. You may be able to trade many term insurance policies for a cash value policy during a conversion period. Cash value life insurance is a type of insurance where the premiums charged are higher at the beginning than they would be for the same amount of term insurance. The part of the premium that is not used for the cost of insurance is invested by the company and builds up a cash value that may be used in a variety of ways. You may take a policy loan and the policy's cash value. If you don't pay back the loan and the interest on it, the amount you owe will be subtracted from the benefits when you die, or from the cash value if you stop paying premiums and take out the remaining cash value. You can also use your cash value to keep insurance protection for a limited time or buy a reduced amount without having to pay more premiums. You can also use the cash value to increase your income in retirement or to help pay for needs such as a child's tuition without canceling the policy. However, to build up this cash value, you must pay higher premiums in the earlier years of the policy. Cash value life insurance products include the following: there's whole life, universal life, and variable life. You may be thinking of buying a policy where cash values, death benefits, dividends, or premiums may vary based on events or situations the company does not guarantee, such as interest rates. If so, you may get an illustration from an agent or company that helps explain how the policy works. The illustration will show how the benefits that are not guaranteed will change as interest rates and other factors change. The illustration will show what will happen in future. You should be ready to adjust your financial plans if the cash value doesn't increase as quickly as shown in the illustration. You will be asked to sign a statement that says you understand that some of the numbers in the illustrations are not guaranteed. Whole life insurance in perspective. Whole life insurance covers you for as long as you live if your premiums are paid. You generally pay the same amount in premiums for as long as you live. Yes. Benefits on it can be tied to inflation, meaning your sum assured and premium will automatically increase on a yearly basis. When you first take this policy, premiums can be several times higher than you would pay initially for the same amount of term insurance. But the premiums you pay are less than the premiums you would eventually pay if you were to keep renewing a term policy. Some whole life policies allow you to pay premiums for a shorter period, such as 20 years, or until 65, though coverage will be for life. Premiums for these policies are higher since the premium payments are made during a shorter period. Variable life insurance is a kind of insurance where the death benefits and cash values depend on the investment performance of one or more separate accounts, which may be invested in mutual funds or investments allowed under the policy. Be sure to get the prospectus from the company when buying this kind of policy and study it carefully. You will have higher death benefits and cash value if the underlying investment does well. Your benefits and cash value will be lower or may disappear if the investments you chose didn't do as well as you expected. You may pay an extra premium for a guaranteed death benefit. Finding a good value in life insurance. How do we do so? After you have decided on the kind of life insurance best for you, compare it with similar policies from other companies to find which one is likely to give you the best value for your money. A simple comparison of the premiums is not enough. There are other things to consider. For example, do premiums or benefits vary year on year? How much do the benefits build up in the policy? What part of the premium or benefits is not guaranteed? What is the effect of interest on money paid and received at different times on the policy? Remember that no one company offers the lowest cost to all ages for all kinds and amounts of insurance. You should also consider other factors, such as how quickly does the cash value grow? Some policies have low cash values in the early years and build quickly later on. Other policies have a more level cash value build-up. A year-on-year display of values and benefits can be very helpful. The agent or company will give you a policy summary or an illustration that will show benefits and premiums for selected years. Are there special policy features that particularly suit your needs? How are non-guaranteed values calculated? For example, interest rates are important in determining policy returns. In some companies, increases reflect the average interest earnings on all of the company's policies, regardless of when it was issued.